Hi, my name is Fiona Harris. I'm a US equity specialist at JPMorgan, and I've been with the firm for over 25 years. My role is a very important one. Consider me the voice and face of the trust. As investors, you really want to pay for your portfolio managers to manage your money. But we also recognize you also want to be able to interact with the investment team. You want to know about their process, how the team is built, how they think about investing, but also have updates on performance and portfolio positioning. The investment philosophy and process we employ in managing this trust is very much focused on stocks as the building blocks. It's a bottom-up process. What does that mean for you? It means we're not looking at macro. We're not looking at economic data or interest rates and then determining where we want to invest. What we're doing is we're looking for good companies that we perceive to have competitive advantage, irrespective of where they exist within the market. And then we're looking to own these companies for the long term. For that strong competitive advantage, we want to know why you go back to a company for their product and service year in, year out. So think about a truly innovative company, a company that adapts their product time and again, so it's useful, that it's purposeful. Or a company that has fantastic customer service, so they're a pleasure to deal with. Our companies are often the market leaders in their space because they'll have those attributes. Some words that many of you will have heard in the marketplace is ESG, environmental, social and governance issues. They're at the forefront of a lot of newspaper articles. When we think about E, S and G, we really break them out individually. For G, good governance. Because we invest in high quality companies, we also want high quality management teams. Management teams that do the right thing, that invest directly in the companies themselves, that think about their employees, that think about the products or services they're bringing to marketplace. They're not using aggressive accounting, making acquisitions that make no sense. For environmental, we want to know the impact a company can have on its environment. Is it subject to greenhouse gases? Is it subject to resources that they're using? And so that's really important because environmental issues can impact a company's long-term earnings and cash flow streams. And the same with social issues. We want to know if these companies are good investors in terms of the people that they have on their payroll, but also in the communities where they're involved. And being a good social company can reap benefits over the long term. The US markets over the long term have truly rewarded investors. There's a lot of reasons for that. Companies have generated great margins, great sales. It's been a great growth story. But also, the US, compared to other markets, is actually the highest quality market. So even in times where there's fear about the US in a recession, or fear in other markets, there's typically a flight to safety. And US equities tend to reward investors over those time periods. So it's a large market with very attractive long-term returns, but also it's a high quality market. And that makes it, for our mind, a compelling long-term investment. We are very disciplined in the execution of our investment process. We're always looking for those quality companies, quality management teams, and when we find them, we're looking to buy them when they're trading at a discount to their intrinsic value, when they're cheaper than they should be for whatever reason. Now that discipline is really important, irrespective of whether the market's trading at a high valuation or a low valuation. We're looking for those individual stocks that can make compelling investments for inclusion. When the market goes on sale, we usually get excited because a lot of our favorite names that we haven't been able to add to the portfolio may be on sale as well. If the fundamentals are still good, compelling investment decisions can be made and you can buy those stocks at really attractive valuations. When we look to the US today, there's a lot of uncertainty. There's a lot of issues we're all dealing with. Inflation, stronger dollar, higher interest rates, And that, of course, resonates both in consumer sentiment and business sentiment. But at the end of the day, we're looking for those companies that can navigate the cycle irrespective of where we are. When we look at the outlook for US smaller companies, you really have to think long-term. Long-term means different things to different people. So we have to think about over a full market cycle. What we have to do is find those compelling ideas that we can invest in for the long term. So we think the outlook looks good, irrespective of what happens with the economy over that short term. When we're looking for compelling investment ideas for inclusion in the portfolio, the attributes that we look for don't change. It's always looking for quality companies, great management teams, companies with consistency of earnings, but also companies today that can push through higher prices with higher inflation. While we may not be able to find ideas across all the sectors in the market, with a great research team, we can definitely find individual gems for inclusion. When it comes to portfolio holdings, we typically hold between 90 and 100 names. It may seem like a lot, but also we can manage risk that way by having a number of names in the portfolio. So no position size is above 3%. That gives us enough active exposure, but also to help manage risk as well. As US small cap investors, of course we love our asset class and we think it's the best out there. But also, when you're looking at potential returns, we do feel that you should get good reward from investing in US small caps. What we're trying to do is find those truly innovative companies, those high quality companies that we can own for the long term in the portfolio. So it's not about a sector, it's not about economics, it's not about inflation. It's finding good businesses that we can invest in for the long term that will hopefully reward us. When we're looking for investment opportunities, but also when we're reviewing our holdings in the portfolio, we really don't think about the macro. We're not macro strategists. We're not going to be the best at determining interest rates or inflation. But what we can be the best at is finding those great ideas that we can own for the long term in the portfolio. So stocks are our building blocks to hopefully deliver great long-term performance. When we think about US smaller companies, those great ideas for inclusion in the portfolio, we're thinking about investing in the long term. We think about 3, 5, 10 years. And in fact, there's names that we've held for even longer in the portfolio. So for us, it's not about the opportunity set because of market environments and investing for the short term. It's about the opportunity set for investing over the long term in individual names.